Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking this Friday evening. Days after Elon Musk's acquisition, Twitter begins mass layoffs. Sources say a large majority of its 200 people strong Indian workforce has been laid off. Reports say a class action suit has been filed alleging that Twitter was sacking staff without adequate notice in the US. Tech austerity grips the world as global companies like Lyft, OpenDoor, Stripe announce job cuts. Indian unicorns like Udaan and ChargeBee also trim their workforce. Indian startups have laid off about 15,000 employees so far, with EdTech accounting for nearly 50% of the job cuts. Byju's faces flack for roping in the world's most expensive footballer Lionel Messi as the global ambassador for its social impact arm Education for All. The EdTech company has announced plans to lay off 2,500 employees and is targeting profit by March next year. Indigo's losses widened in Q2 to nearly 1,600 crore rupees, but revenue doubles to more than 12,000 crores. Titan beats estimates as profits grow 34%. The government is planning to launch 3 offer-for-sale issues over the next 4 months as it hopes to meet the 65,000 crore rupee disinvestment target. Sources say the centre is eyeing 16,000 crore rupees by selling a stake in Coal India, Hindustan Zinc and RITES. That's an exclusive. The European market regulator disqualifies 6 Indian clearing companies, including the Central Clearing Corporation and Indian Clearing Corporation, cites the lack of cooperation agreements with Indian regulators to oversee the clearing companies. The move is likely to be more detrimental for foreign banks. The Kejriwal government in Delhi bans all diesel cars except BS6 compliant vehicles as air quality continues to worsen. Transport Department will run 500 special buses. 50% of state government staff will be told to work from home. The government will make a similar request to the private sector as well. Protests erupt across Pakistan as former Prime Minister Imran Khan supporters take to the streets. Khan was shot at during a rally yesterday. He is currently recovering at a hospital in Lahore and is out of danger. Russian attacks leave 4.5 million Ukrainians without electricity. Ukraine's President Zelensky accuses Vladimir Putin of energy terrorism, says the Ukrainian army continues to reclaim territory in eastern and southern regions. Egypt is all set to host COP27, the annual climate summit. Environment Minister Bhupendra Yadav will be leading the Indian delegation, and climate finance will be top of his agenda. Well, the top story this evening, the job cuts have begun at Twitter. The hashtag Twitter layoffs has been trending since morning, and several employees who've been laid off have been tweeting about it. Yash Agarwal, who was working in public policy at Twitter, has confirmed that he's been laid off in a rather cheerful manner. But sources say a large majority of India's employees have been laid off. All of this is part of Twitter's larger plan to prune its workforce by up to 50% globally. Elon Musk, since taking charge, has already fired the Twitter board and several top executives, including the CEO and the CFO. Ritu Singh joins us now to take us through what we know. Ritu, there is, of course, no official comment yet coming in from Twitter globally or Twitter in India on how many people have been laid off. But there is an estimation that a large number of employees in India have been laid off across different functions, from corporate communications to public policy to, in fact, engineering, which was their largest team. What are you picking up?
That's right, Shereen. While there is no number on, the total number of employees that were employed at Twitter in India, we have been given to understand that a very large majority of these employees have been handed pink slips as of this morning. I mean, this is what we're seeing happening globally, and India is not really an exception. The cuts have been across verticals, like you said. Engineering, one of the largest in India, that has also been severely impacted by these layoffs. Now, we've been able to speak to some of the employees who were, at Twitter, who lost their jobs this morning, and they said they received a letter earlier today which said that Twitter was in the middle of conducting a workforce reduction to help improve the health of the company. And these employees who were asked to leave were informed this morning that their role had been identified as potentially impacted or at risk of redundancy. Interesting choice of words, because, they said the next steps would depend on which country these employees were in. While all access to Twitter systems was, suspended immediately for these employees, the letter also said that this suspension does not mean your employment has been terminated. That is what the letter said. So we'll have to see what the next steps are. But in terms of the severance, etc., that these employees will receive, there was a message that was sent to them over Slack, and I quote part of that. It said, "Today is your last working day at the company. However, you will remain employed by Twitter and will receive compensation and benefits through your separation date of the 4th of January 2023, which is 2 months from now. Within a week, you will receive details of your severance offer, financial resources extending your non-working notice period, at which time you'll also receive a separation agreement and release of claims and other offboarding information." Several employees did take to Twitter, like you said, to talk about their separation, some even cheerfully, and we saw through the day several hashtags trending, and that included Love Twitter and Love Where You Worked.
All right. So, it is what it is at this point in time, and people are really in the middle of a working day being told that their laptops or desktops have been locked out, and they've got to basically get on with life, so to speak. No options, no choices being given at this point in time. That is the majority of the response that we're picking up from employees who have been suspended or laid off in India. The current economic conditions are forcing several tech giants at Silicon Valley to tighten belts, and the Indian tech companies back home are not immune either. Abhishek Datta Roy decodes this new phase of tech austerity that we're seeing play out across the world. Elon Musk, Twitter's new owner and its complaint hotline operator by his own admission, may not want to take frantic calls from employees as his company starts implementing cost-cutting measures. As per reports, Twitter plans to lay off close to 50% of its staff starting today, ticking off yet another item on Musk's to-do list. Reports of imminent layoffs have been doing the rounds ever since Musk took charge of Twitter. An internal mail addressed to employees last evening read, and I quote, "In an effort to place Twitter on a healthy path, we will go through the difficult process of reducing our global workforce," end of quote. The email also says staff members will get notices either through their company email accounts if they still have jobs, or their personal email accounts if their employment is impacted. Twitter also forbade employees from discussing confidential company information on social media. Twitter is only adding to the wave of layoffs across tech companies in the Valley and across the world. A host of others, including ride-hailing app Lyft, online real estate company Opendoor, fintech companies Stripe and Chime, are also handing out pink slips. According to the San Francisco Standard's layoff tracker, more than 16,000 workers have been laid off at 138 San Francisco-based companies since January of 2022. Many of them happen to be tech companies. So why exactly is the tech ecosystem pruning its workforce, tightening its belt all of a sudden? A quick glance at emails sent to employees by some of these companies, and there is a commonality. Companies are bracing for a recession in the US, pulling out of less critical initiatives and trimming their outlook on growth prospects of the internet economy. Back home, after Byju's fired 2,500 employees in a bid to target to turn a profit by March next year, the company's founder Byju Ravindran said this is a huge price to pay for walking on the path to profitability. But this hasn't deterred the nation's largest edtech firm to announce that they've onboarded Lionel Messi as their global brand ambassador for equitable education social initiatives. The company has not disclosed how much they had to shell out to sign the football superstar. Byju's isn't the only company cutting jobs. Unacademy has laid off more than 1,000 employees. White Hat Junior, Vedantu, Lead have all announced job cuts. Even big tech is struggling. Shares of Facebook's parent, Meta, are down more than 75% from record highs. Amazon has imposed a freeze on corporate hiring as the global outlook for economic growth remains grim. The tech industry is certainly tightening its belt across the board. With Abhishek Datta Roy in Mumbai, this is Shereen Bhan. And other Indian unicorns have also trimmed their workforce. Indian startups have laid off about 15,000 employees so far this year, with EdTech accounting for nearly 50% of the job cuts. Now, Tiger Global-backed unicorn ChargeBee has laid off 10% of its workforce as it restructures its organization amidst growing operational debt and global macroeconomic challenges. B2B commerce startup Udaan has laid off 350 full-time employees. This is the second such move at the startup this year. Company spokesperson said that evolution in the business model had created some redundancies in the system, with some roles no longer required. And staying with startups, a setback for India's fintech industry. That's the word in from BillDesk co-founder on the aborted $4.7 billion deal with PayU, which would have been one of the largest fintech deals in the country. Speaking with Ritu, BillDesk's co-founder Srinivas Eman says the termination of the deal was a disappointment, adding that this will create a trust deficit on how Indian companies view foreign investors.
Yes, it has been, I think, a disappointment for the industry, and I think it's also been a setback from a fintech industry perspective of what would have been a large deal and the manner in which it was perhaps called off. So we'll just have to wait for time to see how this evolves.
Do you think it'll have a wider ramification than just one deal falling off for two set of players?
I would think right now the bigger implication is for how does any entity transacting an M&A deal rely on a buyer of that nature to stick to the deal. I think that's a bigger ramification than saying how do people look at India. I don't think that's impacted. India did its job in terms of regulatory clearances to asking the right questions. So I think the implications more from how do Indian companies look at foreign investors sticking to their word.
Well, let's move away from the tech world onto the market action. A late recovery helping the Sensex and the Nifty end in the green. The Sensex gained nearly 150 points. The Nifty gained over 60. Bank stocks saw some profit booking, though, and the Nifty Bank Index closed in the red. For the week, the Sensex and the Nifty have gained for the third straight week. In fact, the last 3 weeks, the markets have gained more than 5%. So it has been resilience and a show of strength for our markets. Shifting our focus now to earnings, Interglobe Aviation, that's Indigo Airlines. Net loss has widened to nearly 1,600 crore rupees in Q2. However, revenue from operations has more than doubled year-on-year to nearly 12,500 crores. The company says that its capacity and passenger numbers increased by 75% each from the year-ago period. Watch and jewelry brand Titan's Q2 numbers ahead of street estimates. The company's net profit came in close to 860 crore rupees, up nearly 34% year-on-year. Revenue up almost 22% at 8,700 crore rupees. The management says retail growth stood at 17 to 19% this festive season when compared with last year. Pharma major Cipla reporting a strong set of numbers in Q2. The company's net profit came in at nearly 790 crore rupees. That's up almost 11% year-on-year. Revenues at 5,800 crore rupees, up nearly 6% year-on-year. Margins expanding to 22.3%. And we're not done yet. TVS Motors net profit jumping nearly 47% year-on-year to over 400 crore rupees in Q2. Operating revenue grew by 28% to more than 7,200 crores. The automaker maintained a double-digit EBITDA margin and recorded quarterly auto sales of 10.3 lakh units. Moving on to a CNBC-TV18 exclusive, the government's disinvestment drive is likely to pick up some pace. Sources tell CNBC-TV18 the government is planning on divesting 3 public sector enterprises over the next 4 months via the offer for sale route. Yash has the details. Yash.
Well, that's absolutely correct. Government's divestment process through offer for sale or OFS issues is expected to pick up pace. What we've been given to understand from our sources is that the government is expected to focus on 3 important offer for sale issues which are expected to be launched in the next 4 months itself. These 3 PSU companies include Coal India, Hindustan Zinc as well as RITES. As far as the progress on government's divestment process is concerned, the government for the current financial year had set a divestment target of about 65,000 crore rupees, out of which 24,000 crore rupees have been raised. Now the next set of divestment process through the offer for sale issues will certainly help the government reach closer to its divestment target. To speak a little about these 3 companies and the OFS process there, for Coal India, it's expected to be about 5,000 crore rupees of OFS, which leads to about 3% government equity into the company. Hindustan Zinc, that's a large one. About 10,000 crore is expected to be raised, which leads to about 8% of government equity into the company. And finally, for RITES, it's expected to be 1,000 crore OFS, translating to about 10% government equity into the company.
Yash, many thanks for joining us. In the IPO corner, BKG Foods issue got fully subscribed on day 2 with strong response from retail investors. The retail book was subscribed over 2.3 times. The company is looking to raise over 800 crore rupees. And Fusion Microfinance public issue subscribed 2.95 times. On the last day of the offer, the retail portion saw a tepid response with only 50% of the book being subscribed. Reliance Industries is spinning off its financial services arm with the aim to take it public. Reliance Strategic Investments has appointed KV Kamath, the former head of ICICI Bank and, of course, the first chief of the BRICS Bank, as an independent director and non-executive chairman. His tenure will be for a duration of 5 years. The company will be renamed Geo Financial Services. It will be listed pursuant to a scheme of demerger approved by the board of directors. Reliance Retail is planning to enter the salon business and is in final stages to buy 49% stake in Natural Salon Spa. The existing promoters of the salon chain, Groom India Salons and Spa, will continue to run its operations. Reliance Retail's investment will help in business expansion. Air quality in the national capital continues to remain a big concern. Chief Minister Arvind Kejriwal has listed a slew of new measures to try and mitigate the current crisis under the Graded Response Action Plan. But it's not just Delhi. Major parts of Haryana and UP are also currently in the severe category, while cities like Mumbai, Kolkata and Hyderabad are also suffering from poor air quality. The air quality in Bengaluru and Chennai are better than those in other metros. The Delhi government has now decided to shut down schools for classes 1 to 5. However, secondary and senior secondary classes will continue, but outdoor activities will be disallowed. The government has also banned all diesel cars except vehicles that are BS6 compliant. The Chief Minister has also announced that 50% of government employees will be asked to work from home. A similar request will be made to the private sector as well. From students to office goers, pollution in Delhi is taking a toll. Abhimanyu Sharma and Danish Anand report on how the capital is coping with the alarming pollution levels.
सांस लेने में भी दिक्कत आ रही है, आंखों में जलन सी भी पड़ रही है और जब मास्क ना लगाओ तो गले में भी जलन सी पड़ रही है. इससे बहुत प्रदूषण से प्रभाव पड़ रहा है.
I feel something dryness in my neck.
सरकार से यही अपील करेंगे, सरकार इसके लिए स्थायी समाधान की तरफ चले, टेम्परेरी से काम नहीं चलेगा.
Another year when people of Delhi are grappling with severe pollution levels. Even as the blame game continues between centre and states over stubble burning, it is the average citizen who has to bear the brunt. To check the alarming rise in pollution, authorities have immediately ordered a ban on movement of diesel trucks and for the first time banned diesel passenger cars as well, except those which are BS6 compliant. Delhi government and many private offices in the Delhi NCR region will allow more than 50% employees to work from home or have staggered working hours. Children, the elderly and those with respiratory problems have been advised to stay indoors.
Pollution levels are so dangerous that, anyone who has a pre-existing lung disease has to be very careful. For the kids, it is, they have a developing lung, and insult on a developing lung for a long period of time, for every year, 2 to 3 months every year, is not desirable. So I will suggest all the kids to remain indoors, curtail their outdoor sports, especially when the AQI is above 300.
There is also a complete ban on construction activities and factories not running on green fuels.
PHA Chamber of Commerce told CNBC-TV18 that imposition of GRAB guidelines has severely impacted the MSME sector, the industries in authorized industrial areas and the construction sector. Well, the labour, the skilled, unskilled and semi-skilled labour involved in the construction sector has no other option apart from staying at home.
Schools in many parts of Delhi NCR have been shut. Many parents believe shutting schools is not the only solution.
स्कूल्स को बंद पूरी तरीके से बंद करना, आई डू एग्री, इट इज़ नॉट द सॉल्यूशन, क्योंकि बच्चों की पढ़ाई बहुत सफ़र करती है. स्कूल्स को आप ऑनलाइन क्लासेस में आप कन्वर्ट कर सकते हैं, बच्चों को कुछ टाइम दीजिए. प्लस आई एम नॉट एग्री कि आप स्कूल्स के जो टाइमिंग्स हैं आप उसको आगे पीछे कीजिए, क्योंकि पॉल्यूशन लेवल अगर मॉर्निंग में 640 जा रहा है, आफ्टर 1 hour it would be reduced like 580 or 540.
Authorities in charge of tackling air pollution have been holding daily review meetings over stubble burning in Punjab. Children, the elderly and those with health problems have been advised to stay indoors. Government and private offices have been advised to allow their employees to work from home, and schools at many places in Delhi NCR have been ordered shut till further orders. The restrictions on traffic and construction are likely to continue till the next review meeting or till the situation on air quality improves. In Delhi with video journalists Pradeep and Rajendra and my colleague Danish, this is Abhimanyu Sharma for CNBC-TV18.
Well, the national capital is struggling, but coming up next, Egypt is all set to host COP27, the annual climate summit. We'll tell you what to expect when we return. The European Securities Markets Authority has disqualified 6 Indian clearing companies. The move is likely to be more detrimental for European banks. Lata joins us now to explain the implications of this disqualification. Lata.
The reason that they cite is that the ESMA, under its rules, should be able to supervise all these counterparties, these clearing companies. Or they should have entered into a cooperation agreement with the regulator who regulates them, in this case RBI SEBI. Since the ESMA has not entered into any cooperation agreement, these companies are disqualified from being counterparties to any of the European banks, any of the European entities. That's the decision they have taken. Now, I just want to tell you what is the Reserve Bank point of view. I spoke with Mr. R. Gandhi, who is the former DG of RBI and currently non-executive chairman of the CCIL. Mr. Gandhi said that this is an ongoing problem. Consultations are on between ESMA and RBI. The RBI's principal stance is in all cases, whether it is NSE, exchanges, all country regulators believe that, each domestic regulator should regulate domestic entities. If RBI certifies that CCIL is well regulated, it is well supervised, then the European regulator should respect that certification. The consultations are on. As of now, the ban starts only from April 30th, the disqualification, April 30th, 2023. Now, what is the impact of the ban? Impact of the ban is, like I told you, all the European banks, say Deutsche Bank or BNP Paribas, all these banks which are in India cannot deal with CCIL as a counterparty, which means the netting advantage you get. What is the advantage? CCIL acts like the exchange for bond market trading, fixed income trading. Now, if they want to buy or sell bonds, they have to do it bilaterally with an SBI or an ICICI or an HDFC bank. They can't do it with the exchange, that is CCIL. To that extent, the banks lose business. Also, they have to keep more capital when they have to deal with counterparties like, SBI, HDFC Bank, etc. So the disability is to the banks, and therefore these banks are trying to speak to their own regulator.
All right, Lata, many thanks for explaining what the impact will be of that disqualification. Now, Egypt is all set to host the pivotal climate summit starting Sunday. Ahead of the 2-week-long summit, the UN has warned that the global effort to cut emissions is woefully inadequate and the world is on track for a catastrophe. Radhika Udas and Arunthi Ramanan report on the key issues that will be debated at the annual climate congregation. Take a look.
198 countries will gather in Egypt's Sharm el-Sheikh to attend COP27. That is the 27th conference of the parties to the United Nations Framework Convention on Climate Change. The delegates will discuss the collective global goal to combat the climate crisis and present their action plans to contribute to these goals.
The heartbreaking scenes from Pakistan and the untold suffering of tens of thousands of victims of this climate calamity, the unprecedented rise in temperature and forest fires in Europe and the United States all confirm that there is no plan B and that the last U-turn is only a few kilometers away.
At the crux of COP27 lies the aim to reduce rising global temperatures. 1.5 degrees Celsius is the target that the nations had promised to work with at COP26 in UK last year. However, the United Nations Emissions Gap Report reflects otherwise.
The report notes the current policies in place are looking at 2.8 degrees Celsius rise by the end of the century, as opposed to the target of 1.5 degrees Celsius. According to the report, India is among the top 6 countries where emissions have increased after the COVID-19 pandemic. The report also goes on to highlight that G20 members account for 75% of global greenhouse gas emissions.
Is that a number of countries raised their national commitments, and then a number of corporates and financial institutions also made strong commitments to ramp up ambition in terms of CO2 emissions reduction. What unfortunately hasn't happened that much since then is the development of implementation plans to ensure that countries and corporates actually achieve the commitments that they've made.
Staring at bleak numbers, COP27 this year is an important assessment of progress on commitment to net zero emissions by 2030 or the lack of it. At the COP meeting, India will demand clarity on the definition of climate financing and how it should be disseminated. In Mumbai with Radhika Udas, Arundhati Ramanan.
COP27 kicks off on Sunday. That's a wrap on this edition of India Business Hour. Thanks very much for watching. Do stay tuned to CNBC-TV18. The news will continue. Have a great weekend. And we will be working over the weekend to fill you in on the earnings. Thanks very much for watching.